WP Carey and its managed funds have been involved in more than 90 PE-related transactions globally with a value in excess of $2.6 billion. The firm recently completed a transaction which involved the acquisition of the Acosta headquarters facility in Jacksonville through CPA 18 Global. That's one of WP Carey's managed funds. Today I'm speaking with Zack Pasanen, Vice President at WP Carey. Nice to have you here. I want to get into this transaction a little bit in detail, but I want to talk to you first about some of the private equity activities that you're seeing overall. When do you get involved in PE firms and their portfolio companies? At what stage?
Sure. First, Rhonda, thanks so much for having me. So WP Carey gets involved in various times during the investment cycle with private equity firms and their portfolio companies. Often we come in at the initial investment or leverage buyout stage. There, WP Carey will complete a sale-leaseback transaction, recognizing 100% of the value of the real estate, which reduces the equity commitment of the private equity firm, also subsequently reducing their weighted average cost of capital and leverage to EBITDA multiple. WP Carey also comes in at post-acquisition. So there, a private equity firm may approach WP Carey looking to pay down shorter-term debt or to fund working capital. And so that really coupled with the first one are the two most common instances in which WP Carey interacts with private equity firms in the portfolio companies.
So tell me about this particular transaction.
Sure. So the Acosta transaction was completed a couple months ago in Jacksonville, Florida. Acosta is the leading outsourced sales and marketing agency for consumer package groups across the United States and Canada. So what they do is they're really the brand behind the brand. So a Clorox or a PepsiCo will hire Acosta to go in and promote new products and work with the retailers directly. So if you see a new soft, a beverage or a new phone, usually it's Acosta working with those retailers to determine the product placement and how to promote that product.
So it's an interesting company. How did the transaction actually come together?
Sure. So the real estate in that transaction was actually owned by third-party executives that were executives in Acosta, but looking to monetize the real estate for estate planning purposes. And so there we were able to work with these executives who still work within the company to figure out a lease structure that worked best for us. And so there we were able to execute a long-term net lease with attractive rental increases in one of the stronger office markets in the country.
And how typical is that in the deals you do?
So sale-leasebacks are very common nowadays. People are always looking to raise capital, and sale-leasebacks are a very effective and fast way to raise capital. So rather than going out and getting a bank loan, you can do a sale-leaseback transaction as quickly as 30 days, thereby recognizing 100% of the value of the real estate and putting it back into the core operations of the business.
Very interesting. Zack, thanks so much for sharing it.
Thanks so much for having me.
For The Deal, I'm Rhonda Schaffler.